So welcome back, everybody. We're here for the current top 100 coins topic. We are joined again by Serge Ravitch, former lawyer, professional poker player, and project manager turned angel investor, crypto investor since 2011, but made some big bets in 2017 and is currently in Puerto Rico. Also by Jesse Berger, which I messed that up again.
It's all right.
Based out of Utrecht, and also the founder of Index Monkey, which is furthering accessibility to blockchain technology so everyone can be a part of the decentralized future. And then also we have Ted Rouhani joining us, Yeah. Graduated with the MBA, worked at Deloitte for several years with IPO clients, worked at Live Nation for quite a long time, the Carlyle Group, and then became an entrepreneur. Has worked in the health and wellness food space, 2 startups, social media influencer platform called ID Merchandise, and now he is the founding partner at Nexus, which is a blockchain incubator. Ted, welcome to the group. Well, we have a pretty open topic here for the current top 100 coins. I know that you and I were speaking earlier, Ted, about some of the topics that we wanted to cover here. And you know, when you look at the top 100 coins, I mean, what is it that really like peeks out to you and interests you about them?
Yeah, well, you know, I'm a huge believer and fan of Bitcoin, so you know that obviously jumps out as one of the top platforms and projects and technology projects of the entire space. I think they own much of the market share. You know, some of the things I think when I take a look at the top 100 currencies, cryptocurrencies, I take a look at the handful that really have a lot of promise for this coming year and the promise to kind of move the technology forward and get us closer to the mass adoption that we're all waiting for, you know, throughout this bear market. So, you know, a couple of things very high level, you know, some hopeful for some exciting developments with Lightning Network this year, you know, as Bitcoin aims to crack the scalability nut here. You know, some good work that Stellar is doing, you know, in their partnership with IBM, and also Bitcoin Cash as well. So, you know, these are some of the coins in the top 100 that we've been keeping an eye on, and we're kind of excited to see how this year develops out and you know, just kind of builds out over this year.
Do you think that let's say the top 20, which is Bitcoin, Ripple, Bitcoin Cash, EOS, Stellar, Tron, Cardano, IOTA, Monero, Dash, NEM, Neo, Ethereum Classic, and then some stable coins. Do you think all of those are here to stay, or are we going to be seeing the disappearance of some of those?
So the top 100 scams page on CoinMarketCap. Let's go. Right. This afternoon, in preparation for this topic, I scanned through this list. By my count, I see about 35 scams, and I mean genuine attempts to part people from their money with no development for years. I see 5-6 stable coins, didn't keep an exact count, 5 to 10 coins I've literally never heard of, all of which have transaction mining in common. I wonder what this coin at 75 with $5,000 in volume and a $46 million cap is doing here. Let's think about it. Look, this page represents most of the things wrong with crypto today. If I had to bet on 3 coins here, I would put Ethereum first, Bitcoin a fairly distant second, and I'm not sure what my third would actually be here. Maybe Binance Coin, because I feel like the ability of CZ to get out of any and all legal issues is truly amazing. Just to get into the weeds here, right? look, one Doge is worth one Doge. I'll never get in the way of this. I feel like a dead coin with a $250 million notional market cap that does 16 million in transactions a day should not be on this list. Okay, Bitcoin Gold and Bitcoin Diamond should probably not be on this list. A dozen different projects that don't actually exist today should not be on this list. Litecoin and its 6 months behind of development off the chain that it is supposed to be a testnet for should not be on this list. Tether, let's not discuss. EOS is a security. Sorry, I said it. IOTA doesn't work. List, Bitcoin, all of these coins from 2014 that have no particular reason to exist right now should not be on this list. Lots of things should not be on this list, but I mean, we could really do this all day. In terms of coins that might have a foreseeable use case one day for someone to do something, I think Ethereum is strongly number one on this list, not because I think it has the largest chances to succeed, but because it is the only one that is getting massive scaling development effort aside from Lightning Network. And I'm skeptical of Lightning for very different reasons. I think it's a worthy development effort. I just think, I think the use case for Lightning specifically is at odds with Bitcoin as a protocol, and that can be its own discussion and its own panel. But Ethereum is the chain that, unlike EOS, unlike Tron, unlike basically everything that is trying to compete with it, but is more or less of a clone, is the chain that projects are trying to build on. I don't know what the odds of success are. I'm not technical enough to gauge that. I don't think anyone in the world is technical enough to gauge that, given that all this is highly speculative at best. But if we're going to see massive scaling improvements, then I'm betting on Ethereum as the chain to deliver them in the next 3 to 5 years. I think it's really that simple. If we see mass adoption, then it comes through Ethereum because it has to come through Ethereum because that's where the development is. And that's kind of my beginning and end of approaching these cases here.
I'd also like to add that Ethereum is, just leaving Bitcoin alone, Ethereum is the only one of the coins which was a security, but now is decentralized enough in the eyes of the SEC not to be a security anymore, which gives it...
Yeah, that's a very big deal just because EOS has all of those issues ahead of it where Ethereum has left them behind. That's huge and something to consider.
So do you think that market cap is the right way to, I guess, rank these, or is there a better way to do it?
It's an absolutely terrible way of doing it, but it's what everyone uses, so let's use that. Of course, it makes no sense. Like, none of these coins are actually, the amount of money in this compared to market cap is tiny, but it's what we are used to using. So for the purposes of this discussion, sure, why not? Dogecoin is a $250 million asset.
I think one of the answers to that question is, right now, I mean, we saw first week of January 2018, market cap hit 800-900 billion, and we're hovering a little over 100 billion now. So there's been a lot of change, and we're going through this transitional period where the market is figuring itself out, and we're trying to build and kind of strive for mass adoption and get blockchain rolled out, touching enterprise as well. So I think that, whenever that happens, whether it's 12 months, 24 months, whatever the timeline is, I think the new money or the real money that's going to start coming into this market is going to shift and change the landscape of the top 100 for sure. A lot of the coins right now that Serge just mentioned, like Dogecoin and some of the projects that people FOMO'd into, a couple of years ago, and just through community management and marketing and releasing updates, they've kept people interested enough to be able to hold their position in the top 100. I think a lot of these projects are going to get pushed out, and the landscape's going to change. I think kind of looking down the roadmap a little bit, a lot of projects there are going to be enterprise friendly and allow big businesses to come and utilize their products or their technology, are really going to be positioning themselves well to make that top 20, 30, 50, coins list, whatever it is.
So Jesse, if you were building your, I guess this question is for you, is that, if you were building your index, would you follow the same pattern that Serge followed?
Yeah, it's a discussion that you really can keep going forever, because there's a fine line between trusting your own judgment about is this bad or is it good project, which there are valid points to say this is bad or this is good. But it's hard to test it if your judgment would have been good in the past, in hindsight. Like I wasn't a supporter of Ripple for a long time, for instance, and I thought it was a very bad project, but nonetheless, it made it into the top 3 a couple of times. So I think that once you take the leap to trust your own judgment and say, I do not support this project as an investment, that's very different from believing in it as a development point of view. But I think that if you take it for an investment, I personally like to invest more towards a systematic approach instead of a fundamental or technical approach. Mainly because I trust something that I've tested a couple of times with assumptions I trust more than I trust my own judgment about a project, its future, since that might change in ways that I do not see, or I might be biased towards my judgment over a project, such as Ripple, which is in my opinion, a very good case that it can go a very different way than you assume it would be.
Yeah, I think there's going to be quite a lot of turnover, but if you're indexed, then you're really not biased towards that turnover. I guess you said in the beginning it was very difficult to build a top 100 index.
Yeah, in essence, a index is not just buying it in one point; it is updating it over time. So if the top 20 or the top 100 changes every single day, week, kind of depends what you prefer, and you have to update it every single day or week, whatever you prefer. But that also means you need to make a transaction, and every transaction has a minimum. For Binance, it depends. It changes every day for market orders. Limit orders is about 0.001. So your smallest position should be 0.002 just to make it safe. And if you would buy the entire top 100, your smallest position would be somewhere way down the line, about 0.1 or lower percent, since 90% is in the top 30. So the rest of the 70 would be 10% of your portfolio divided over 70 positions. So to buy it, you would need a pretty big amount of money to make the smallest position tradable.
Right.
So yes, it would be, and if the only other way to do it would be a centralized fund, which I'm not a fan of personally. Doable, yes. Is it safe? Not really.
Or you'd have to change the weightings.
Or you change the weightings to even. But once again, then you get into the point about Serge that some things shouldn't be in the top 100. And it is an assumption that more trusted projects get up higher towards the top 10, for instance, such as Bitcoin, Ethereum, etc. And the more riskier ones are lower down the list. So you make those weightings smaller just to make the risk less. For instance, if something in the lowest position I have is about, I think, 0.3%. So if that moves to 0, it doesn't really hurt me too much. For instance, if Ethereum goes to 0, though, that will hurt me. That's about 10% for me.
So we've seen in the past year, companies, I think the biggest one that's been released so far was the Rift token from Rootstock. But we also saw Telegram raise $1.4 billion. Polkadot raised $200 million, which was subsequently lost in the parity attack. Or parity hack, along with, I don't know, there's probably 6 or 7 other projects which raised over $100 million, which are waiting to distribute those tokens, Filecoin being one of them. It seems like there's a lot of entrants which are coming to hopefully make a break into the top 100. But I personally think that, a lot of investors who invested in these big projects are probably going to be let down quite a bit, at least in the initial first years. What do you guys think about the oncoming projects which haven't been released yet? And where they're
I'm sorry for your losses in advance. It depends, though. I mean, yes, some of them will. It's hard to imagine Telegram falling out of the top 100. That would be truly impressive. I would be amazed to see that. But it's all, do I see any demand for Telegram tokens until such time as Telegram manufactures this demand somehow? No, of course not. So we're back in the same position we were, before these tokens ever came out. Cardano is $1 billion market cap right now. That's fairly comparable to where Telegram is. How many people have used Cardano to do something with it? How many people have used Bitcoin SV for anything ever?
Don't tell Craig read that.
Yeah. IOTA, the handful of projects I knew that were actually genuinely excited about IOTA entirely dropped out of IOTA after it became clear that it was useless for anything. But here we are. None of these chains have projects. None of them have building. None of them have any useful activity happening ever. They exist to make more Bitcoin. And then Bitcoin exists to make more of these things, and they exist to make more Bitcoin. And it's all very interesting if you're a technical analysis trader, but they're going in one direction, guys. Really. Please don't buy and invest into a protocol chain that has nothing hanging off the chain and no prospect of anything hanging off the chain. So Filecoin, Telegram, all of these projects are going to be entering into the same kind of market and into the same kind of positions. Obviously, Telegram has hopefully a better future ahead of it than Bitcoin's original vision, but it's all a matter of degree.
I think to add on to what Serge just said, a lot of these projects, let's just use Telegram for example. To raise $1 billion is an astronomical amount of money. Using Telegram as an example, they, what's the purpose of a token really? On Telegram, they already have a working product, they already have a business, they already have a revenue model. In my opinion, a lot of these projects just saw the gold rush and they said, let's build a token so that we can raise more capital and have access to more money. So, their timing was not great. And also the investors who invested in those projects, the timing for their investment wasn't great. One of the main uses obviously for cryptocurrency is, exchange of value. And right now, to have a platform where you're using a token to exchange value with all the volatility behind the crypto assets, there's no real use case currently for that exchange of value. So a lot of these projects are going to be in hot water from day one as they look to kind of build out and release their tokens. And I would actually challenge a lot of these projects and say, hey, you can use blockchain and layer the technology in to improve your product or your service, but what's the point of using a token? There's really none at this point.
So as a founding partner at a blockchain incubator, is this like a common thought, or it may not be explicitly said between the companies that you're saying, but are you thinking in your head about where they would eventually end up on the top 100 charts, or also are these conversations happening among the companies themselves, kind of thinking about like where the expected market cap should be for these crypto assets?
Yeah, the only time as a startup, when you're starting to build out the roadmap, you're really worried about market cap is to see where competitors are, to how to value your valuation relative to what other people in the market are doing. But I think teams that start off from day one kind of focus on where they want to be in terms of market cap and position and, the top 100 coins, that's a failing proposition. Last year, we were having a lot of conversations when, the question really was about valuation. And then those conversations in the last 6 months have really transformed over and shifted to, why do you really need a token? Is there an underlying token you can use, Ethereum, or GoChain or whatever it is? Can you still achieve the same results for your revenue model while utilizing somebody else's token and not be so obsessed? Because, when you create a token and you become part of this list, there's a lot of factors that you can and can't control. Liquidity on the secondary markets, buy pressure, sell pressure, all these things that right now these teams, they're so much so in their infancy that they're not well equipped to deal with these different risk factors. So, you know, to answer your question, I think last year it was more of a focus, but now it's not really, you know, the projects that we deal with, they're not really focused on the market cap. They're focused on surviving and making it, really, you know, getting to the end of their roadmap.
You know, because argue whatever you want, but you look at something like Tron, which has probably one of the greatest marketers running it out of the entire bunch, and you know they're at number 9, right? So I know if you're able to push your project up and, you know, raise loads of money and then be able to sell the tokens off, you know, it does actually help you kind of fake it until you make it if you can push your price up. You know, you do have that extra liquidity. You know, if you do need to sell team or company tokens, you can extend your runway a bit more, and allows you to survive. So I think there are arguments for keeping the price up, regardless of, well, I mean, you can't keep the price up through like market makers. I mean, that doesn't work, but like having a good marketing campaign, having a good PR company, and really being out there and getting your brand there. Because, you know, you have to think about the market that 10 years ago, Bitcoin and cryptocurrencies didn't exist. So from a marketing perspective, you have to teach people about a product that they've never used before. And so it's these companies, these new ones like Ripple, they're doing a lot. They're hosting a lot of events. Dash does a lot as well too. And Bitcoin does a lot as well, where they're actively going out and teaching people about the product, introducing them to the brand, so that they have that understanding, so they can, you know, gain that initial concept of how to use it, what it's used for, and then bring them into the brand. So,
you know, it's interesting that you mentioned Tron and market makers. Tron has some pretty good market makers. Ripple has multiple teams of market makers.
Yeah.
Now I'm not accusing anyone of doing this because I don't know. I have no personal information, and this is not, you know, financial advice or an accusation or anything that would get me into legal trouble. But if I were interested in selling lots of my tokens over the counter, and if I were interested in using a fraction of those proceeds to push up the price on exchanges so that I could sell more tokens over the counter, so I could push up the price of exchanges and so forth, I think I would do much the same thing that I believe Tron might currently be doing. I have no inside information on this or anything other than what I see by reading a chart, but it is very curious. Just asking questions. A lot of this is, it's difficult for me to imagine this kind of business model surviving in the medium term. Let's put it that way.
Do you think that, I guess this is do you think it's better to look at the crypto market capitalization by not including tokens, by taking the ERC20 tokens out?
It's so hard to say. I don't know. I think we've settled on this as a community, for better or for worse, so we may as well stick with this. Just remember to use massive grains of salt at every point.
Because it's really strange to me that, like, in the top 100, you have MakerDAO, or sorry, Maker there. You have Tether there.
Yeah, and maybe removing stable coins for starters would be a good starting point. I don't really see anybody carrying whether or not DAI or USDC is on this list. But other than that, I don't see that. I'm not strongly for or against.
Another question might be, if market cap is not the correct measurement, what would be a better tool to measure a project valuation that is more fair than a market cap?
It's going to be balance sheets if we ever get to the point where crypto companies are transparent with that, which I don't know, maybe. You know, actually, this brings up another thing I wanted to talk about. Take something like 10x. That's at the bottom of the list right now. So 10x is an interesting example of everything going wrong except for one massive thing, right? Like they had no business model that was ever going to work. Crypto credit cards, the issue with mass adoption of crypto credit cards, by the way, is that for regulatory reasons, the United States and most of Europe is just a terrible place to do that. Yeah, the taxes make it all, make crypto cards completely impractical. So their whole business is just a failure from the first moment. Like they would have to wait on regulatory authorities to move on taxation of all things before this was even a possibility. But what do you know? They played the market incredibly well, and they have a treasury of apparently about $100 million. Their token is worth 35 million, and it's completely useless. But the company can just sit here and burn its million or 2 million a month and survive for 4 to 5 years, effectively doing nothing. So, well, how do you value this? To be honest, I don't have the slightest idea. It's got to be greater than zero because the company is operating funds for years. It can't be all that high because there is no business here. You have to pivot to something completely different, or just take 1/3 of your current treasury, refund all of the current token holders 1-to-1, and take your $50 million payout and go home. That's what I do. Which also implies that the token should be worth something. But how do you actually value that? I don't know.
I don't know if you do stocks, but it kind of sounds like you prefer cash flow over anything else.
I prefer something, right? Like you have to have development, you have to have a treasury, you have to have the ingredients to a working successful company.
What would you, in the company, if you would do a company, would you use a balance sheet or cash flow, preferably?
Either, I wouldn't see anything wrong with either approach as long as you justified it.
Yeah,
the
so
first approach is clearly wrong, but I don't know what's right.
Yeah. So for companies, it's a little bit easier to do measurements with balance sheets and cash flow since you're regulated and you're supposed to have both most of the time. But for cryptocurrencies, which are more accessible and you're more, to put it lightly, more free to do what you want, basically. So to say, and another measurement that people have used quite a bit is the amount of transactions that are done by said project. But obviously that isn't fair towards every single project. So for instance, let's say that IOTA would work one day. Like what if it worked today? It would be pretty insane compared to the rest. Same for Ripple, for instance. So that people could argue that's not really a good way of measurement. Like more is better. It's not really, sounds a bit too simple, doesn't it? So would it be better if there was a better way to measure the valuation of cryptocurrency projects in a unified manner, same as cash flow and balance sheets, but we don't have one yet, except for maybe volume and market cap?
I think
the
market cap, but the market cap isn't good enough, as we brought up before. I think maybe right now, but before we get into before we have any theories on this, that maybe the best thing to look at is the aggregated order books. And let's say you had, I don't know, you could just start out with $100,000. How far would it move the markets if you were just to market order $100,000 in whatever crypto asset you're having? In Bitcoin, it's not going to move it at all. I mean, maybe less than a percent, less than 0.5%, right? But you go down to number 50, which would be, just take a look. You go down in Stratus, right? You go to Stratus and you do a $100,000 sell order across aggregated order books. You know, how much is that going to move the market?
I am familiar with it, but I forgot the term for it. I think it has a term, but I forgot what it was.
like depth of market or
something like that.
Yeah.
So I do really like the discussion about how you measure projects, because it's a really difficult answer, it's a really difficult question in cryptocurrencies, and I think everybody's trying to answer it in its own way. And I think that a unified measurement is just not possible right now, and everybody's taking its best guess. The one I currently use, though, is, it might sound a bit simple, but smooth moving averages of market caps, basically, to make it sound more simple. And you put on a minimum of liquidity, since you don't want the good old story of funds that get stuck in positions because they can't get out. So you put those on, and that basically, it is the best I've found so far to work when you backtest it. Obviously, there's something like overfitting and backtesting and all that. But so far, I found that if you smooth it out and you make it more about measuring consistency compared to the value on a given day, has been so far the best for me. But I'm really interested, apart from fundamental value, what Serge would think about how would you measure it today, basically?
Well, one place to start maybe with something as simple as the value of transactions across the network. I've seen a couple of blogs start doing that, and that's an interesting take. At least, I mean, that works for protocols, right? It doesn't work for tokens. For tokens, I think you have to use some traditional company metrics. What else would you use, really? I mean, we can break it down into two components, I suppose. For companies that are trying to do something, you almost have to just look at, are you actively developing this project? What is your market space? What is your runway? What are you doing exactly? How well are you doing it? These are all traditional company questions. They're stock market questions. We have tools for this that work, and it's a matter of waiting around for the crypto space to be mature enough to actually force these companies to tell you some of these things. And then for protocols, well, honestly, you look at transaction volume and what percentage of these TX are going to something worthwhile, which is to say, not my own wallet, not Binance, not from Binance to my wallet, back to Binance, back to my wallet, something where a tangible economic transaction is taking place. And I mean, by the time you get there, you basically have 2 or 3 contenders, and that's it, right?
Yeah.
So,
Ted, what sort of standards are you using for your incubator to look at these companies coming up?
Well, I mean, there's 2 main questions that we ask when we do a deep dive and we start doing our due diligence. First is how feasible is the technology? What is it going to contribute to the ecosystem, and how is it going to be transformative or disruptive to for whatever market they're kind of targeting. And the second most important question is this team really the team that's able to execute and get the job done? We meet a lot of CEOs who really aren't CEOs, and we meet a lot of people in decision-making roles that really don't have any business being in those roles. So those are the 2 factors that we look when we want to work with projects. Now, I want to quickly just go back to the conversation that Jesse and Serge were having about how to value these companies. I don't mean to oversimplify it, but I think that if we were to include some sort of revenue target or focus on revenue a little bit to kind of line these projects up, it would actually end up forcing a lot of these projects to focus on things that they need to be focusing on, like business development and growth. If you're going to go ahead and rank companies by revenue, then it's gonna really motivate people to focus on revenue, which is one of the main things that I think is missing right now. A lot of projects have raised a lot of money. They want to build a lot of cool stuff. They're not really focused on building a 2-sided market. And I think if you do introduce these revenue measurements, it's going to alleviate some of those things that we're seeing.
So I just to touch on that, I think we discussed this a little bit in the STO one. Do you think that the US needs some sort of regulation where if you're a company that's issuing a token, you need to have some sort of not a full 10K being released every single quarter, but some sort of amended info about your balance sheet, your cash flow, income statement?
Like a quarterly disclosure. Yeah, a quarterly disclosure with the audit done by an external party, at least to validate the key balances, the material balances for sure. I think that will make a lot of teams and projects way more accountable, not only with what they're presenting, but with how they're spending their money and they're investing the capital they've raised.
Right, because so much has been mismanaged in 2017 or 2018 as well too in this bear market. Have you seen that with any of the companies that you've worked with or have consulted with?
Are you talking about mismanagement of fees or money?
Well, like companies that may have gone through an ICO but just didn't cash out and thought that, oh, hey, we'll hang on to our 20,000 ETH and it's going to double in the next 6 months.
Absolutely. I mean, you see that more times than not, which is unfortunate. You know, I think the speculative side of all of us, you know, I mean, you know, last year the market was on fire. Towards the beginning, I mean, 2017 and the very first couple of weeks of 2018. So when the market dipped last year, you know, the projects that raised in ETH or Bitcoin, they, you know, they were optimistic and hopeful that it was just temporary, and all this ETH that they're holding on to or Bitcoin they're holding on to was going to increase in value. The smart projects didn't, you know, they hedged their risks, and they also understood that, you know, anything that their tokens they're holding on to that would appreciate over what they raised would be taxed, you know, at capital gains. So they went ahead and they played their position as well. But unfortunately, a lot of projects held on hoping that ETH was going to go to 2000. That happened.
Question about Incubator. Do projects keep their whatever they raise in Ethereum, or do they switch it to dollars if possible, or whatever?
It really depends on the team and the project. You know,
when would you advise a project to keep it in Ethereum? Because it seems like betting your company on Ethereum, which is not necessarily a bad thing, but let's be fair, it's probably safer to keep it in dollars in the meantime for your runway.
In my own space, which was the gaming space, gaming and crypto overlap too, and that's just a complete nightmare for banking issues. In my own space, virtually no company could cash out 100% for many months after an ICO, simply because getting a bank account was 98% of the problem. It's certainly hit nearly every team. And anyone that cashed out more than zero was already well ahead of the curve there. So it's not always the team that's to blame. Regulatory issues were a big part of it. But I think if I had to guess how many, in my little corner of the market, probably 90% were exposed.
So we have a couple of questions from the group. We have Jeff who asked, how can you measure cash flow on a decentralized project using auditors, or how would that be done?
So let's say you're the SEC and you are not relying on any new regulations, which will not be coming out anytime in the future anyway, and you're using with existing tools. Well, it turns out that 100% of all projects launched in 2017 were securities, okay? So how do you cure that? Well, you find them a little bit, at least the ones that weren't incredibly over the line, and then you say, what else can we do to make this fair to investors? So one clear way to make this fair to investors would be to require them to do all the things that securities are required to do, which includes quarterly audits, balance sheets, and the rest of it. And I think that's one way you'll see the SEC approach this and possibly cure this down the road.
Yeah, about the cash flow, I think that the cash flow might be forcing on, I don't really know the word for it, but kind of an old way on something that's entirely new, because the company is supporting a project instead of the other way around. Normally it's the legal entity protecting the business instead of the other, around. So I don't know if cash flow will work for every single project, because I don't think it applies to every single project.
I mean, it's entirely okay for cash flow to be zero and the company to still be a going concern for a while if you have the runway to support that, and if you have prospects of making of getting to that cash flow one day. I mean, how long was it until most of the .coms of this era became profitable? Up to a decade in some cases. I don't think that's disqualifying, but I think it's important that we know what the deal is.
Yeah, it's kind of like, I think it's, to make it a better comparison is on balance sheets you have something named goodwill, which basically means however much we think your brand is worth. You could use the same thing on cryptocurrencies, even though it might not be your brand. But yeah, I think that it's basically a gap in the sheet that is hard to fill. So you just give it a spot and a good name. And I think that it would happen the same to cryptocurrencies, especially since networking effect is pretty heavy for cryptocurrencies in specific. Well, not for every single one, but for some. So I don't know. I don't think that cash flow would be a good measurement for all projects. I do think it's a good measurement for some projects, such as Nexo, which deals with a lot of licenses and regulation. I think it's good for companies such as these, but I don't think it's good for everything. And I would like to see a better tool of measurement, I suppose.
Well, I guess the protocols would be harder, the tokens would be easier, security tokens would be easy. So it's all on a spectrum. Yeah, I mean, it's going to be interesting how we develop. I mean, I'm sure the SEC is watching very intently how these decentralized projects come out. You know, I don't know. I mean, you can't go after the protocols themselves, but you can go after the companies who are providing the infrastructure and the development for those projects. So you look at Bitcoin, is it Block One? I can't remember. I can't remember the primary people doing the coding on Bitcoin. I'm blanking on that one. But you look at like the Ethereum Foundation. You look at all the other different projects which maybe have foundations, and then they're providing different funding to other projects. I don't know. It's going to be very interesting how this goes forward. Yeah. So what exactly do you think makes some of these projects as robust as they are? You know, I know we're going to see a lot of turnover in the next year. You could probably take a screenshot of the top 20 or top 100 today, and probably 80% of them are going to be gone. So, you know, we can start with Ted, and, you know, what do you think is going to make them robust and have staying power?
I mean, it's simple. It's who right now is developing out, you know, building and developing further on top of what they already have, and what kind of partnerships, meaningful partnerships, are they closing in the real world. So, you know, one focus, you know, for us is projects that have you know, their eyes set on enterprise, right? You know, enterprise solutions, enterprise products, enterprise services. So any of these projects in the top 100 that do have enterprise-friendly products and services, and they have the ability to execute, I think they're going to be around for a long time. Again, you know, to go back to the very beginning of the call, you know, I'm a huge fan of Bitcoin, but, you know, you have projects like Ripple and Stellar that are out, and they're making partnerships with like IBM and, you know, and American Express, and they're doing things that you know, whether you like the project or the technology or not, they're putting themselves in position to really take in a lot of the growth in the market. I was reading something very interesting earlier about IBM, and what I came across. I read that you know, 90% of credit card transactions are processed using IBM mainframes, and 97% of the world banks are IBM clients. So, you know, for a project like Stellar, you know, to put themselves in position to be partnering with IBM, I mean, they're at the forefront. So it's going to be very difficult for them to fall out and not be a top 20 coin going into the future.
Great, guys. Well, let's wrap it up. Let's get some final comments. We'll go around. We'll start with Jesse, and just give some final comments on the top 100.
Yeah. One thing before we go is the turnover. I do think that it will be very different in 2020. And I think if you do take a snapshot, the top 20 or the top 30 or top 100 will look very different. I still think we have some big names that will be there, hopefully Bitcoin. But yeah, I think that the turnover will be, it's still a zero sum. So when one enters, a new one comes in. So I don't know. I think that the turnover wouldn't necessarily be a bad thing. I think it would be a good thing.
I think the question of what stays and how we can tell what stays is a really good one. If we could only tell, it'd be great. A lot of it, honestly, is going to feel like complete accident because we don't know the balance sheet issue. That is, we don't know who cashed out. I think in a lot of cases, you're going to see, unfortunately, teams that actually are coding and are doing things simply run out of room. And at the same time, there are going to be 20, 30 projects that they're still around in 5 years, and we will have no idea how. And it's going to be because they cashed out in January and they took their $100 million off the table, and now they've got money to burn forever. I'm actually quite, in spite of just saying EOS is a security, I'm kind of bullish on EOS in the long run because they have infinite money. And that's a lot of pivots. So that kind of thing is going to be very important going forward, who manages the treasury correctly. Development, of course, is very important, extremely important. But the lower you go down on the top 100 list, down to the 20, 30 million valuations, where you can't really count on selling large amounts of your tokens for more funds, the more important it's going to be who was lucky enough to time the top.
Ted?
Yeah, I mean, again, I'm personally keeping my fingers crossed. I know Serge is a little hesitant or skeptical about Lightning Network, and keeping my fingers crossed that Lightning, you know, they make some advances this year. Bitcoin starts to make a run. I think that will help every single one of the teams and projects in the top 100. You know, yeah, I think, again, I think focus on development. I think focus on utilizing cash, burning through cash the right way on the right things, and really focus on, you know, business development, the partnerships, and developing out the technology to be stronger and better, in my opinion. So that's it.
Well, great. Thank you, guys. It's been very insightful and actually really fun discussion panel. Thank you, Serge and Jesse and Ted. We're going to wrap up here and move on to our next topic, which is going to be crypto OTC. So we're just going to break off here and we'll come back in a minute or two to get to crypto OTC. Thank you, guys.
Thank you.